Hello, everybody. Good afternoon, good evening. It is Saturday, the 4th of February, 2023. I'm here to take a look at Bitcoin. I want to take a look at Bitcoin through the duration of the major correction that we've gone through, for the duration of 2021, 2022. And I want to take a look and see where we could potentially be going here. And I want to take a look at the short term as well. But before I get into all of this, as you all know, this is not financial advice. I am not your financial advisor. You're responsible for your own trades, managing your own risk, doing your own research, and I'm just giving my opinion on the market. So let's go ahead and dive in. So what I'm going to do here initially is I want to focus again going into kind of the structure that that I've identified here so far. I want to take a look here at this what we originally thought was a diagonal. We knew that it was going to break down, and it's really what happened. It broke down. Then we had a nice little 1 2 3 4 5, and then a correction here into a 2. And then we had a nice parabolic move up. And, when I say parabolic move, what I'm really, just sort of what I'm really saying is that we had a period of time where we had, the price was moving up, and then it was moving up higher and higher and faster and faster. Then all of a sudden we kind of broke through and things, really just launched. Now that we've gotten there, hey, Liversity, good to see you on here. I can take a look at IWM at the end. That's no problem at all. But at any rate, we saw a nice big move up and out of here. And I've got this white line on here. I want to talk about what that means and why that's there here in just a little bit. But again, from this bottom here, it's nice completion of a correction, a nice little 1, 2, and then a big wave 3. We expect this in a wave 3. Wave 3s typically are the most violent and in a real impulse. It's the most violent. And then, we had some sideways here. This is very wave 4, right? It looked a lot like a wave 4 there. And then, of course, we've got, the structure from where we're at right now, a nice little 1, 2, 3, 4. And then, we could be still, we could still see another move up here to finish wave 3. It's possible that wave 5 is not in yet, but the formation that we are currently building does look like we're going to see a top very, very soon. I think it's going to be coming. If it hasn't already happened there at 24,280 roughly, it's not going to go much higher, maybe 24,6, something like that. Really looking at this, it's just a lot of chop. There's a lot of chop going on up here, and really it's getting to the point where a lot of people are trying to buy the dip. What I could easily do right here is I could easily pull a trend line right in the middle of this, and I can see that dips are being bought up over and over and over, right, through the duration of this. And it has just recently happened as well yesterday afternoon. So once this breaks down, chances are pretty good we're going to see a move back down. Maybe we consolidate here, a move back down here, and this would be ideal to go into the end of the week. So the end of the week being tomorrow, because that's when the week starts. The week starts on Sunday evening, and this would make a whole lot of sense. Looking at the 15, the oscillators, they're going to move. They're going to move, many, many times over and over. They're going to reset over and over. So let's go to a higher time frame. I'm going to go back to an hour. All right, so I want to take a look at the hourly. All right, so first off, we do have a squeeze going on here in the hourly, and things are starting to curl back down just a little bit, right? So I do want to point that out. We do have indications that at least on the Wave Master, we've got, the hourly pointing down, the 3-hour pointing up, the 12-hour is pointing down. I think that's important to pay attention to. So what's going to happen from here? Let's go ahead and let's go back to that 15-minute here and just kind of take a look at the structure that we've got going on right now. So what we can see is that we have declining support, and then of course we also have evidence that we had declining resistance as well. We've just kind of broken up and out of that. So it would be it would be okay for us to go up a little bit higher, potentially up here to about 23,750 before we see that move start to go further down. So one way or another, this is what I'm trying to say. One way or another, I think that we are going to see lower prices than where we're at right now. And I don't think we're going to see a new high up above 24,280 before we see a move down here to the low or mid 22s. The mid 22s, that's ideal. That's where I would be looking to, kind of shave a little bit off of the net short that I have. And so I guess when I say net short, I am 10% short on my crypto portfolio, 90% long, 10% short on my crypto portfolio. Basically, I've got an ultra low leverage short position on what I basically had cashed out at 21. So I entered that recently, and basically what I'm looking for is a move to come back down here to kind of move that back to cash, maybe get a 1x long position to to potentially go a little bit higher, because what's again possible here is when we come back down here to this level, that'll be basically the fourth time we hit this level. We've got 1, 2, 3, and if we do come back down here, that would be the fourth time. Chances are pretty good we're going to make another move higher. Don't know how fast it's going to happen, but I want to take a look at some time cycles here in a minute. Again, that's something that I've started to pay more and more attention to. And I have found a couple things here that are, really quite interesting. So first things first, let me go ahead and point this one out right here. So I'm going to hide this guy for right now, because I don't want us to be able to see that one. All right, so basically what I've got is a time cycle high here, which is basically at the high, and then I've got, this move down here to the low. Now, what this does kind of show is we have a high, the next cycle was a low, the next cycle was a high, next cycle was a high, and then we had a drop off after this cycle, we had a drop up after this cycle, we had a drop off after this one, and we had a drop off here, and then we had a little bit move up and a drop off here, and now things are different. We had a significant move up after this. So what I want to do is I want to go back and look and see if there's any meaningful relationship between the two cycle highs that we have. So I'm going to measure from this high here. I'm going to go to this high here. I'm going to put them right on top of each other. So the white one is the time cycle where we have the two significant highs. Okay, so the high here, drop off. High here, drop off. And then over here, a big drop off. Now, again, what we've got right here is where things shifted, where you should, adapt, right? Because fact of the matter is we had, high after lower high, after lower high, lower high, lower high. And now we're getting to that point where now we're making, really a higher low here, because we had a low here, we had a higher low here, and it started to do that parabolic move. And I think that is important, all right? So we started to have a little bit of a parabolic move up. And so now we're taking a look at really what's our next cycle. Well, what I think a lot of people are looking at, what a lot of people are waiting on, is a move up here to the high 20s. And again, I still think that we're going to have to move down here into the low 20s in order to, or really just close to 20,000, right? That would be down here at about 20,800 or so. We need to get this move back down here before we see that move go up a little bit higher to at least 26.7, potentially 28.3 or 28.4. And at that level, we're going to have significant resistance based on this clustering that we had back here. We will break through that at some point. More than likely, it will be this year. But for right now, this is what I'm starting to see. So what I would really expect to happen over the next, let's see here, this goes into March 15th. So about the next 6 weeks or so, I'm expecting Bitcoin to maybe go up a little bit higher, come back down, right? It's going to take a while to come back down here. and then make a significant move to the upside, and likely it's going to end up, somewhere around that 26 to 28,000 level. And that I do expect is probably going to coincide with a time cycle. And then once we get up here, what I'm really kind of expecting to have happen is probably a prolonged correction. Okay, so we've got ABC, ABC, and then we're going to have a nice big move down into this strong demand. So once we get down here, what that's going to basically be is what I would consider a significant buying opportunity. I believe right now, based on the price action that we've had, significant buying opportunities are going to be anywhere under 20,000 right now, based on the price action that we have so far since the November lows. The price action that we have is bullish. And again, what I really expect to have happen is, a nice pullback here into the short-term demand zone, which is going to be right around that 382, which is at 20,800 or so. Maybe it only comes down here to 22,000. That's very, very possible as well. Here to the 236. If we get here to the 236, the chances of it getting to that 382, the negative 382 extension, is much higher. But then again, we're going to more than likely have a prolonged correction after that. So this move up has only really taken about half of this time cycle. I think we're probably going to get that little pullback. We're going to go up here to this level. Then we're going to start a significant pullback. Now, the big question that's on everybody's mind, and I'm going to talk about this here for just a moment, and then I'm going to move on and kind of wrap things up a little bit. The big question on everybody's mind, is this an ABC correction from the bottom here? Is this an A and then a B, and then we're going up for the C, which would go into, potentially the end of the year, right? Or is this a 1, 2, and we're going in for a 3? Now, I think the likelihood that we're going to be doing something like this is pretty darn small. Okay, the chances of us doing a 1 and a 2, and then we're going up for 3, 4, 5, I think the chances of that happening are actually pretty small. I'm going to go ahead and mark that in red because I don't think that this is the probable outcome. I think the more probable outcome is going to be this, this outcome right here. This is probably the more likely. So the more likely we're in an A and not a 1, and we're going to go down here for a B and not a 2. And again, this is more than likely going to occur and going to hit sometime around August. Okay, so we've got a lot of time for this to play out. And let me tell you what's going to happen from a psychological standpoint. What's going to happen, because market psychology is real. Market psychology is a thing. We're going to get up here, and you're going to have a lot of people that are going to be buying, that are going to be going long. They're late, right? If you weren't long and weren't in altcoins and weren't playing profitably from a long perspective back here, really up here you're putting a lot at risk. Because right now we're really chopping. We've been chopping ever since January 21st. So really, for almost the last 2 weeks, the price of Bitcoin hasn't really changed a whole lot. The volatility is not all that high right now. So again, what that lends to is people are going to get bored. And when you've got investors that aren't getting returns, they're going to sell. And what that's going to do is that's going to pull back the price of Bitcoin. It's going to get people reinterested in the asset. But from a psychology standpoint, we're going to get this pullback. And then what I'm going to start seeing, and I see it all the time, what I'm going to start seeing, and this happens all the time, right? So let me go ahead and clear this out. Let me just tell you what you're going to start seeing across the universe. Now, if Bitcoin decides to start moving down right here, let me tell you what you're going to see. What you're going to see is you're going to see somebody say that we had, a 5, 3, 5, an expanded flat, because, really what you've got right here, you've got a nice, beautiful leading diagonal right here, and it went up in 5 waves, right? You can see this right here. 1, 2, 3, 4, 5, and you've got subdivision in there, right? You've got this, ABC up, ABC down, ABC up, ABC down, ABC up to make that wave A. Then you've got your 3 waves down. Okay, you can count this pretty easily too. A, B, C, right? You would need to be blind to not see that, right? You've got nice 3 waves down. And then from these lows, what do we have? Okay, well, clearly we can see 1, 2, 3, 4, 5, 1, 2, 1, 2, 3, 4, 5, 3, 4, 5. Okay? We can count a 5, 3, 5 right here as an expanded flat. But expanded flats are really not that common. That should be like a last resort. Expanded flats really aren't that common. We don't see them as much as people think we do. But what you're going to start seeing is, again, you're going to see that expanded flat. So what you're going to see is you're going to see somebody saying, all right, well, here's the 1, here's the 2, here's the 3, the expanded flat into the 4. And so now we're going to go all the way down here. We're going to go down to 12,000. Well, from a technical standpoint, does that work? Well, let's just look. From the 2 to the 3, where's the 382? It's all the way up here to 29, but where's the 236? Let's go ahead and throw that on there. And let's put this on log scale because I think that's fair. Right there. Perfect. At 25,965. If we do get up there, right, and you start to come down, you're going to see the expanded flat fanatics that are going to say, yes, we're going straight down. We're going to go down here to 14,000. We're going to go straight down. We're going to go to 6,000. We're going to go all the way down here to 6,000. Like, if we do, that is a generational buying opportunity. But I don't think that's in the cards based on the structure that we have. I really don't think it is. So be careful, looking at anything that says that we're going to be like really just decimating everybody and we're going to go straight down. I don't think that crypto is that bearish at this point in time. Again, based on what I see, I would say that more than likely what we're going to get is we're going to get some significant resistance up here in this level. But really what we would expect is, this to go up here, hit that level, get that pullback, and then we'll get another big move up going into, maybe the end of the year, right? So again, this is probably a little off, but we're really looking at something a little more substantial like this. It's going to take time and patience. But that's more likely what I expect to have happen versus the market just basically, from here going down, moving up, and then just going straight down. I don't think that is in the cards. I don't think that's likely what the market is going to do. Now, I could be wrong, but from what I can see right now, that doesn't look like what's going to happen. That's not what I can see at this point in time. All right, so that's really what I've got on Bitcoin. Let me go ahead and go back to the other chart that I had here. This is again on a higher time frame, just sort of a bigger Elliott wave view. And again, this is exactly what I've been talking about. This move back here to the 382 at about 20,800, then a move up here where we've got lots of resistance. We've got some resistance clusters up here in the mid to high 27,000s. And then from there, I think we're going to get a significant pullback. I think we're going to get a significant rejection, and likely it's going to come back down here to these levels, right? It's likely going to come all the way back down here to the 20,000 range. And from there, that's where we're going to be kind of looking at the market, seeing what the wave master looks like, watching the structure, and, just kind of making a move from there. But, as right now, this is what I'm looking at. So I'm going to go ahead and move on to Lifeversity. He requested that we take a look at IWM. So let's go ahead and take a look at the Russell 2000. So Russell 2000 is above a key level that I had there about 195.18. Let me go to the daily here and just take a look at this. So let me clean this off right here. So I don't look at this chart very often. What I will say is that this looked a lot like a wave 4. And then we had a little bit of a poke and then a major rejection. So, from where we're at right now, we've got significant resistance that we're going to be running into. And if we hit it, it's probably not going to be anytime soon. That's going to be up there at about 208. So the risk, in my opinion, is to the upside. I think that the bigger reward would be a downside play, but I would be very careful and cautious. On the daily, just taking a look at the indicators here, a couple things that I'll point out. The daily is very overbought. And, on the yellow wave on the daily, it's also up and overbought as well. And the daily just crossed down. But at the same time, the red wave on the daily has just crossed up. And so when you get something like that, your longer term pressure is going to be pushing to the upside, while your short term pressure is going to be moving to the downside. So more than likely, if I wanted to take a look at this, more than likely what I would expect to have happen is from here, we're probably going to come back down here to maybe like 189, 188, somewhere along that lines, because there's going to be a significant amount of support right there. So you can see that right here. And I'll go ahead and point these out because these are the levels that you should be paying attention to. There is support, there is support. And then from a resistance standpoint, we've got resistance at that level as well. And these are also very important. A level right there. We've got a level there, another level right there. And then, of course, right here where we had the last rejection at that level. But then again, taking a look at it, we also have a little bit of support that just happened right there as well. So I would expect there to be a significant amount of support getting back to that 188 level. So let's go ahead and see if we can pull some moving averages on here and just see where these are all lining up. All right, so first off, this already looks actually great. Looking at this, what we've got is the 100 and the 200 have crossed, and that's the 100 exponential against the 200 simple. The 100 exponential against the 200 exponential is not quite there yet. So that just to point that out. Let's take a look at the 50. Actually, we're going to do the 55 and the 200. The 55 is getting really close to that 200. Now, I will give caution here. And let me just go ahead and make this a little brighter. I'm going to change the color just a little bit to make it easier to see. And then we've got that 55 that's approaching. So when you get these two that are close to crossing, right? Let's just take a zoom out and let's take a look and see what happened the last time this happened. Okay, so this is the closest that they have been through the duration of the 2022 bear cycle. Okay, but let's go back and see what happened the last time we got to the point where these were pretty close, and that was right here. Okay, and what was happening? Well, IWM was moving up, right? IWM was moving up, and we also had the 55 and the 200 that were getting close together. And as soon as they kissed, okay, and this is the point where when you hear the news, it's too late. Because what happened right here, the moment that they kissed, it moved up for 2 days. And then what happened? After 2 days, it dropped 11%. That's pretty significant, in my opinion. On an index, 11% is quite a bit. So if these guys over here get to the point where they do kiss, I would expect, the news outlets to be like, hey, the 50 and the 200, they're crossing. This is a big deal. Yeah, probably. But more than likely, what you're going to get is you're going to get a little bit of a pullback. And an 11% pullback would take you all the way back down here to like 180. So that's what I'm saying. Be careful. But again, going back here, I think it's important to point out that when those crossed, we came basically back to the 200. So we're not talking about like, a devastating drop, at least at this point in time. And this is also making the assumption that these guys do cross. It's important that they do cross in order to make a hypothesis that we are going to potentially be going back to new highs. Now, I'm not saying that we're going back to new highs. I'm definitely not saying that. I'm not ready to say that just quite yet. And it's too early to make that kind of a claim. But if they do cross, that is pretty bullish. And I have to admit, if they cross, that would be bullish. The last times, we've had them cross, after a significant move, and I would say this is a significant move. This is a significant move. We did have a significant move here. They crossed. We had a lot of chop, but we ended up making a new high compared to back here. Down here, We crossed, we pulled back, we ended up making a significant high back here, right? So now we've had this pullback. We're not crossing yet. And if we get a significant pullback before this crosses, that 55 may start to falter, especially if we get below that 200. If the price action gets below the 200, that would be pretty bearish, especially if it happens before that 55 crosses, which means, by the way, it has to happen within the next 4 to 5 days. It has to happen next week. For us to be super bearish, it has to get back down below this 200 really by next week. Really what we could see is a little bit of this going on where things start to, cross. And what ended up really happening here is you get the moving average traders that are just basically getting their faces ripped off. That's why I don't really like trading off of moving average crosses, but I will acknowledge the fact that when they do cross, I do have to change my bias just a little bit. So, that's my thought here on IWM. And again, kind of an upside target here. I'll go ahead and throw this out there. And Ahmet, I'll take a look at the Unfi coin. I'll take a look at that here in just a second. But an upside target here for IWM, if we had to put that on there, we basically hit that 100. And actually, that's kind of significant that we hit the 100 there. The next move to the upside is going to be this 123.6, which is going to be about 204. Don't really have any significant moving averages there. But yeah. So let's see here. The chart from the Unfi coin can be viewed incorrectly. The number of pieces is small, and it looks very nice. Let's go ahead and see here. UNFI. Okay. We'll go ahead and take a look on Binance because chances are pretty good Binance is going to be what looks the best. So how much history does this guy have? It has history throughout the duration of 2021 and 2022. So it's got something going for it here. We've got at least 2 years of price history, which is nice. You can obviously see that we've got, significant support down here in this area, right? We've got lots of support right here. So that's important. Chances of it, really getting super bearish down below $2 is really not likely based on what I can see here. Really the real interesting thing is within the matter of just, a couple weeks, this thing went all the way from basically the all-time lows and moved all the way up to all-time highs. So the liquidity here is pretty small, I would say. But again, just like most cryptos, this is, this is an asset that is, it's beat up, right? We're getting buy signal here. It moved up, buy signal here. It just kind of moved sideways, and then it started to kind of move down a little bit. The next buy signal is right here, and the next buy signal is right here, and we're starting to move up here. Very similar to what we saw in Bitcoin. We do have evidence that we do have a little bit of contraction on a wedge here, which could be indicative of a 1, 2, a nice A, B, C here to put the price action back down here, not to make a new low, but to get that price action all the way back down here. And then what, again, we would kind of expect is, another move to the upside. And where do we have here? From this to this high, and we pull this back here. It's not ideal. We do have resistance, clear resistance that we've got here at the 630 to 650 area. So I would be very, very careful that this is, kind of an A, B, C, and that C could be complete. So I would just be very, very careful of being too heavy into this. Now, it does obviously look like it can move very quickly. And of course, looking at this, it was a 452% move in one day. Maybe that was a pump and dump. I really don't know. But I would definitely be cautious for something like this. But as long as it stays above the 200, exponential here in the daily, which is at about 540. Now, if you bought around 6 and you're scared, okay? So let's talk about this for a second. If you get into a trade and you're scared, one of two things is happening, all right? One is you've put way too much into that trade. If you're putting enough money into a trade that you are scared, you should probably pull a lot of that out and move it to cash. Because fact of the matter is, there are hundreds of great trades that you could take. And if you're putting a lot into this, I would be very, very careful. Now, again, what you have to ask yourself, let's just say you put $10,000 into this, and this comes back down here to the 200. That's 10%, right? So if you put $10,000 into this and it loses 10%, you're losing $1,000. That's a big deal. That's the risk with crypto, though. But the upside here, the upside is we could be going all the way up here, which would be a 33% gain. But you have to look not at what you could make. You have to look at what you would lose if you're wrong. Now, I will never tell somebody to just continue to hold after buying up here, because we could come all the way back down here and then you've lost $3,000 of that $10,000. For every dollar you put in, you're losing 30 cents. That's a big deal. So the only kind of advice that I would give, and I'm not really giving advice here, I'm just saying what I would do, is if you got into this and you're scared, you're probably too heavy into that asset. I would pull it out, look for better trades, because there are better trades. There are better trades out there than what I can see right here at $6, right? The best trade on this would be to get a buy down here at the 200. Now that's already happened 1, 2, 3 times. Will it get back down there? Maybe. But if it does go back down there, I think the chances of it going a little bit lower are a little bit higher, just because it's already tested that level 3 times. Next time it goes down there, that might be the time that it breaks. So just be very cautious. And again, if you get into the trade and you're scared, then chances are pretty good you have too much in it. There's nothing wrong investing in anything, but just being able to manage what you would lose if you're wrong. And again, know when you're wrong. You should always have a plan for when you're wrong, because I'm wrong a lot. There are times where I'll get into an options trade and sometimes I let it go to zero. But fact of the matter is I enter all of my trades with a hypothesis, with an idea, with a plan, and I go through with that plan from A to Z. And I think it's really important that you do that, because what I don't want to have happen, I don't want you to buy up here at $6, basically right where we're at right now. We're at 603 right now. I don't want you to buy up here and then find out that this is never going to come back up here and it's just going to go down here. It's going to sit down here at $3 for the next year. That's really not something that you want to see. So if this breaks below this 200, and when I say breaks, I don't mean like a wick like this. I mean like the candle closes below. Like for instance, this right here, we had the candle close below. Sure, we bounced up, but look what happened. We ended up falling back down. Okay, same thing right here. We broke down. Yeah, we poked back up, but then we fell. So if that happens back here, and we do get a move back down here and it closes down here, yeah, I expect a little bit of a pullback, but be careful for that. Because if that's what happens, then you're going to be looking and you're going to say, all right, how do I fix this? How do I get out of this? And then you're going to get into a revenge trading mentality, and that's not good for anybody. So just be very, very careful. Watch this 200, because what I will say that's good about this is, we got a rejection from the 200. We got a good rejection right here, and then good rejection right here. And we actually even had a rejection right here. But what have we been seeing? We had support here, and support here. So there's support there at that 200. But if it breaks it, that's where I'm saying be very careful. So that's really all that I can say on this guy right here. If you have any questions, you can always reach out to me on Discord. You can always reach out to me via email as well. You can get a hold of me at mybitdoctor@gmail.com. I'm going to go ahead and wrap things up here. I do appreciate everybody joining in. I hope this was helpful. If this video was helpful in any way, shape, or form, you know the deal. Like, subscribe, share. If you need access to our Discord, you can find all of the information on BitDoctor.org. And, last but not least, wherever you are in the world, I hope you're having a good day, a good night, and a good evening. Take care, everybody.